Hi, good afternoon, everyone. Thanks for joining our quarterly webinar series. I'm Emily Sides. I'm a partner and financial advisor with the Sides Wealth Advisory Group. And today we're going to be talking about budgeting. If you joined our last quarterly webinar, we talked a little bit about paying off debt. So if you attended that, this is hopefully building a bit on what we covered last time. It is not necessary that you attended our last webinar, but just wanted to mention that if you have attended some of our topics in the past, sometimes these do build on each other a little bit. So again, today we're going to be talking about budgeting. If you have questions throughout the presentation, you can either email me directly at, a lot of you know me, at emily@sideswealth.com, or you can email our group email, which is info@sideswealth.com. Either of those I'll be able to pull up at the end and answer any questions that you have. So again, you can email me directly or our group email, so emily@sideswealth.com or info@sideswealth.com, and we'll get to those at the end. So let's get started. So some of the topics that I'm going to be covering today are the 6 steps for creating a budget, which if you have the time, feel free to kind of work on these as I'm talking about those on your end. We're also going to be sending out a worksheet afterwards that will outline all of this for you, and you can do this on your own time. We're also going to talk about ways to move forward with your budget, developing better spending habits, which I know is a very hard thing to do this day and age, and then tracking your cash and then how we can help here at the end. So, I personally think and believe that budgeting can be really challenging and difficult to do day to day. There is so much to track now. We have money moving in and out. We're spending money every day. Budgeting is really hard, and the average person doesn't budget. So if you're listening to this right now and you don't have a budget in place, that's pretty normal, and that's okay. But oftentimes when we're motivated to budget, it is because we're trying to meet a financial goal or a financial need in our life. So that typically spurs us to think about starting to budget to get a better grasp of our finances. So some of those things that we typically budget for are listed on the screen. There could be others as well, but these are ones that we see most common. So maybe it's buying a new house or a bigger home. Maybe you're expanding your family and you want to start thinking about saving for your child or a grandchild, a college fund, starting your own business, changing your job, or maybe it's something as simple as just getting your finances in order and starting an emergency fund for yourself. That's typically the first thing we encourage people to do when we think about budgeting is making sure an emergency fund is established. And then from there, we talk about other ways to save, like saving for retirement. So these are some common reasons that we might be budgeting here, and we're going to talk about today. So let's start with step 1. And again, feel free to do this as I'm going through this. You don't have to. Again, we're going to send a worksheet out afterwards that will allow you to do this on your own time. But step 1 is going to be starting with your own goals. And we want to write them down. I am a big person of believing in writing something down makes it feel more real, and therefore I'm more likely to do it. So start by writing down your goals, and you want to be pretty specific with these goals, and they want to be measurable. So we have 2 on the screen that are an example. Maybe it's just establishing that emergency fund. So maybe you want to have $1,000 saved in an emergency fund. This is saying April 1st, but maybe since today is July, the goal is going to be October 1st or December 1st. Another one is paying off credit card debt. So the goal here is to pay off $5,000 of credit card debt in the next 18 months. Then what you want to do is, once you start to think about those goals, have them written down and they're measurable, you want to divide the dollar amount by the number of months to figure out the monthly goal that you would need to contribute towards this. So for example, you have $5,000 of credit card debt and you want to pay it off in 18 months. That comes out to be about $300 a month you would have to contribute towards that debt to pay it off in that time period. So you want to start to think about these goals on a monthly basis. Step two, we want to start to think about money that is coming into our budget, into our household. And we always want to look at our net pay. We don't want to look at our gross pay. So our gross pay is the money that you're earning before any taxes come out or any deductions come out. Your net pay is the number after those deductions. So what is that money that's being deposited into your bank account each month? You want to look at your net pay. You can look at this on an individual level. If you have finances that are combined with a spouse or someone else in your household, you can certainly look at it on a bigger scale and look at both of yours combined. Totally up to you as to how you look at this. We always want to look at net pay. And then we want to look at our monthly expenses, which I think can be one of the more challenging parts to this is looking at your monthly expenses, tracking your monthly expenses, and figuring out how much you're spending in a lot of different categories. So the easiest way to do this is to go back for the last 3 to 4 months and look at what you've spent on your bank account and on your credit card bills in different categories and start to tally those up. And you'll get a good idea of month to month what you're spending. You want to look at everything. So some of those typical categories that we have are groceries, your rent or your mortgage, all of your debt payments. So car loans, student loans, credit cards, home equity line of credit, all debt payments, your cell phone bill, cable, utilities, entertainment, miscellaneous expenses. And you definitely want to make sure you're accounting for some of those expenses that might not hit every month. So I pay my car insurance yearly. That's something that I still want to budget for because it's an expense I have to pay every single year. But it's not coming out monthly, but I still want to factor that into my budget. Doctor's visits, things like that that don't necessarily happen every single month or are reoccurring, we still want to account for. So you want to total up your monthly expenses. This again can be that challenging piece or a piece that's a little bit more time consuming. If it's easier, you can always start from this day forward and say for the next 3 months, I am going to start tracking my monthly expenses. Okay. And then step 4 allows us to kind of create a budget based on those numbers we put together. So you'll want to put down your monthly income, that net income number. You'll then want to subtract your living expenses, your monthly living expenses, and then you can add in those financial goals that you built out in step 1, and then you get a number left over. It's pretty obvious, but you want that number to be positive. If that number is negative, then we have a little bit of work to do because that means that we are going to be spending more than we're bringing in. And we obviously want that to be the opposite. We want to have money left over that maybe we could put towards other goals or increase the rate at which we're paying off that credit card debt or whatever it might be. But this is where we can really create that realistic budget. So when you're doing this, if you do end up with a negative number, you just want to go back and rethink about all these numbers that we're talking about right now. And where can you prioritize? Where can you change something in order to create a realistic budget? So I know that if you have credit card debt, the goal is, of course, to pay it off as quickly as possible. And maybe it is $5,000 that you want to pay off and you want to pay it off in 6 months, but that's just not achievable. Maybe you need to extend it to 12 months or 18 months in order for it to fit your budget. So changing the timeline of your goals or the amount of your goals, prioritizing different goals. And if you have too many goals at once that you're working towards, sometimes that can be a challenge. So focus on 1 or 2 goals at a time. And then if you're really ambitious, think about ways to increase your income. Maybe it's asking to work extra hours at your job or picking up a part-time job in order to meet your goals. But there are other ways that you can customize this to create a budget that works for you. All right, so we're going to move on to our second topic, which are some common ways to move forward with your budgets. So maybe you don't have any specific goals in mind. I'm going to give you some things to think about here to move forward with your budget and maybe set some goals for yourself. Oops. And first, we're going to talk about building an emergency fund. So I already mentioned this, but this is one of the first steps that we encourage people to take when they're thinking about getting financially healthy or in a good financial place. We want to make sure an individual has an emergency fund. So an emergency fund is typically an expense that is saved that will cover, I'm sorry, an account that is saved that will cover 3 to 6 months of your living expenses. And it is truly an emergency fund. You want to keep it separate from your checking account. This account should not be used for your monthly groceries or entertainment expenses. It should really only be used for emergencies. And again, you want it to cover 3 to 6 months of your living expenses. You want to make sure it's in an account that you can easily access, so it's a liquid account. I think that there are some really great places out there right now because interest rates are a little bit higher that you can save this in a money market or a high yield savings where you might be able to earn 3 to 4% on an account, on an emergency fund account. But again, this is an account that you want to build up that will cover emergencies for you. Over time. This is not something that you're going to be living off of day to day. Some statistics here on emergency funds that I think are interesting. So this is from a couple years ago, from 2022, but this is showing you how people are doing with saving money in an emergency fund. So 25% of Americans have 6+ months of living expenses saved right now. 19% have about 3 to 5. And about half of Americans have less than 3 months saved or don't have anything saved in an emergency fund right now. So just some statistics around where we're at today. Another thing to think about, which I haven't spent much time talking about when we're building a budget, is making sure we're saving for retirement. And we call that paying ourselves or paying ourselves first. And this is something that our team here really can help educate you on and help make sure you're set up for success in and saving in those retirement accounts. I have two listed here, IRAs or employer-sponsored retirement accounts. Employer-sponsored retirement accounts are going to be the easiest way for you to save money for retirement. Think of that as a 401k or a 403b at your job, or even a simple IRA at your job. Those employer accounts that, because you are working there, you're allowed to save money out of your paycheck into that retirement account for you. There are some fantastic investment options that you can typically choose from in these accounts. There are tax advantages to saving in these accounts. We encourage people, everybody's a little bit different, but generally we encourage people to save about 10 to 15% of their income for today's income for retirement in the future. So this is another really important part of building out a budget and making sure you're in a good financial place. And again, the easiest way to do that is in those employer-sponsored accounts. If you don't have a job that offers a retirement program, you could also save in an IRA, which is an individual retirement account. Typically, you can set up direct pay right out of a bank account that goes into an IRA. The limits on what you can save in these accounts are pretty significant. So this year in 2026, if you're under the age of 50, you can save $7,500 in an IRA and $24,500 in an employer-sponsored account. If you're over 50, you get some catch-up. So a benefit to getting older is you can save more, and your limits are actually a little bit more than those numbers that I gave. But this is a really important part of making sure we're in a good financial place, is making sure we're paying ourselves for the future and that we're setting ourselves up for success for a good retirement. And these are the easiest accounts to do that in. And then just some other things to think about that I think we already know, but it cannot hurt to reiterate when we're looking at our budget and ways to meet our goals. One of the easiest places is looking at groceries and where we're spending our money for food. I have a pretty bad habit of ordering delivery for my husband and I. And those apps, the DoorDash apps and Uber Eats and whatever it is, get really, really expensive. That is a super easy place for me to cut back on spending money. And I bet some of you listening to this can too. But look at where you're spending money on your food. You know, limit those lunches. What if you're at work and you buy lunch every week? Maybe you start packing your lunch. Make sure you're eating your leftovers. You know, all these simple things that we know are the right thing to do, actually putting those into place can really help our budget. And again, a similar note here, you know, finding cheaper gas. I know we say it, and sometimes we end up just stopping at the closest gas station, but we say we should find the cheapest gas station. Actually doing that, putting simple these simple rules into place within our own budget will really help us get to a better place financially. So just some other things to think about here. I'm gonna move through these screens pretty quickly. And again, I think these are all things that we know, but I just want to reiterate some do's and some don'ts. So if we focus on that column on the right, we want to be buying generic products where we can instead of name brand products. It can definitely help reduce our costs of our grocery bills specifically. You want to make sure you're using ATMs that don't have ATM fees if you are someone that frequents an ATM. We want to think about, of course, if we have extra cash, saving more in our retirement accounts and not buying lottery tickets. I know how easy it is to want to spend money when it's in our bank account. If you're saving 10% in your 401k right now, but you have an extra $50 a month, increase that 10% to 12 or even just 11%. And it's so much, it's an easy way to make sure more money is being saved for you for your future, and that you're not spending it today where you don't need to. And then, you know, subscriptions are another big one. This is talking about apps here, but apps and subscriptions, you know, look at your phone and look at what you're subscribed to and where you can cut back. That's another easy place that you can probably look at and reanalyze where you're spending money. Okay. So moving on here, how do we continue to track this going forward? A couple ways we can do this, and everybody's preference is going to be different. You can always keep a handwritten spending journal. Again, I said this earlier. I like to write things down. So I get the want to physically write down all of your spending and create that budget on paper. It can be pretty time consuming to do that, but that's an easy option number one. There are spending journals that you can buy out there all over the internet, or at your local store that have spending categories for you that you a pre-made journal for you basically that you just need to fill in. That's an easy option for you. You can also go digital. So you can create a budget through Excel, through Google Sheets online. There's typically some free resources out there. So of course you can do all of the same things that I just talked about, but do it digitally. And then the last, which I see the most appealing and the most popular nowadays, is doing it through an app. So there are tons of different budgeting apps out there. Some are free, some you do need to pay for, that target different things, target paying off debt, tracking your expenses, building a budget. But a lot of people have started to use apps now to track their expenses and to build out a budget. So there's some on the screen here that are pretty popular. And then really over the long haul, another way to track and make sure that as you're budgeting, you're moving in the right direction is to look at your net worth statement. So your net worth is defined as everything you own minus everything you owe. So on the screen here, you can see we have everything this person owns on the left-hand side, tangible and intangible. And then you've got everything this person owes. You get totals at the bottom. And what you want is when you look at your net worth, you're going to subtract again your assets minus your liabilities. And if you have a negative number at the end, over time, if you're budgeting correctly, you want that negative number to shrink. If you have a positive number at the end of this, you want your positive number to grow over time. So this is something that you can look at on an annual basis. even every 6 to 9 months. This is not something you need to look at monthly, but something that over the long term you can start to track. And again, you want those numbers heading in those directions, and that means you're doing the right thing. You're heading in the right direction financially. And then lastly, I'm just going to end here with how we can help. The Sides Wealth team, we can certainly give you guidance and advice on everything I talked about today, debt management, all those good kinds of things. But where we really excel is helping you do that long-term financial planning, making sure also that your investments are aligning with your goals. So feel free to reach out to us and we can help do some of that long-term financial planning for you. We can make sure your investments look good, your accounts, where you're saving money is where those different accounts should be and they're invested correctly. So please use this as a resource. I think a lot of you know this, but I'm one of a handful of advisors on the team, and we've got some great support staff here too. So we're all here and we're all happy to help with all of this. So that's going to take us to some questions. I'm going to show that info email on my screen. So if you have any questions here, you can email info@sideswealth.com and I will answer your question. You can also email me directly at emily@sideswealth.com. So we will give it a minute here to see if any questions come in. And while I'm waiting for that, a common question that I get with this type of topic is, what goals should I focus on first if you have multiple financial goals? And everyone's situation, again, is a little bit different. So there isn't a clear answer, but I think something really important is looking at your debt. And if you have high interest debt, I think that's something that should be a priority for a lot of individuals, is to work on paying down high interest debt. Credit card debt, some of these credit card companies can end up charging you upwards of 20% interest on your debt. And you want to make sure you're paying that off as quickly as possible. So looking at your debt, I think, is a great place to start. If you don't have any high interest debt, the next step is that emergency fund. If you have that emergency fund, then I think the next step is making sure you're really ramping up saving in those retirement accounts. So that's a common question that I do get when we're thinking about this. I haven't had any questions come through yet. We'll give it another minute before we wrap up here. I still don't see anything coming through, so I'm going to wrap up here, and I just want to thank everyone for their time. And I just, again, want to mention that budgeting is hard, and don't overcommit yourself. Start small, start with a simple goal, and once you achieve that financial goal through budgeting, that often gives you the momentum to keep going. So don't take on too much when we think about budgeting and reaching our financial goals. A lot of these goals take time, take years. So be patient. Let us know how our team can help you achieve your goals. And I hope you'll have a great rest of your day. If there's anything we can do offline, feel free to email us directly and we're happy to help. Thank you all.